Over the past 65 years, researching and cross-checking modern portfolio theory has created several accepted truths. The first is non-correlation in asset classes. All asset classes go up and down at different speeds at different times. You cannot choose which one will win next year. You cannot, of course, time the market. We now understand that there is such a thing as an efficient frontier. In fact, modern portfolio theory is such a big deal that it caused the reconstruction of the Uniform Prudent Investor Act and the Prudent Man Rule in 1994 by illustrating that there is such a thing as a predictable portfolio and that formulas exist that show us how to maintain it. The optimal asset allocation for a particular portfolio is that unique allocation which minimizes portfolio risk while maximizing the portfolio's expected return. Our job is to allocate and reallocate to make sure we maintain the correct blend. Modern portfolio theory identifies the relative importance of the variables involved in investment decisions and the relative benefits of proper diversification. According to a 1991 study on portfolio performance, asset allocation is by far more important than market timing and security selection in determining portfolio performance. See that the other factors reach 2.1%? We think much of this is in fees. Adams-Hansen invests its energy accessing asset classes at the best possible price and then blending them into your optimal portfolio. Their process begins with determining which asset classes they're going to use and to get a rough idea of how they might blend together. There are dozens of fund families that have dozens of analysts purchasing stock of companies that fall within the selected asset classes. These companies manage bazillions of dollars. Adams-Hansen does not think that they can do better or less expensively than the firms that they've selected. Since it's the blend that matters, style purity, price, and relative performance cause them to narrow their search down to a few funds per asset class. They then go through the process of blending and reblending the funds to closely match the target allocation. Once there, it's maintained, which generally requires buying that which is shrinking in relative terms and selling that which is expanding. This creates a short-term lag in fast-moving markets, but allows us to capture the benefits of volatility over time. Adams-Hansen goes through all of that to get to this, a predictable range of returns. If the portfolio were not reallocated to maintain your risk, this would be a snapshot rather than a forecast. The investment strategy allows us to have confidence in the long-term results. This graphic shows our conservative portfolio's expected results. The lower line shows us to be at or above that line 95% of the time. The upper line does the same with the high end of what's possible. These portfolios are often part of a larger account or fund, and we stress test them to determine, in this case, if we can at least retain our principal within 5 years under poor market conditions. We establish the target range of returns, do allocations and reallocations, and continually test the portfolio against the target, which, as you can see, we can get pretty close to. Using this management techniques allows us to capture the gains, purchase shares or units at a relative discount, and maintain our standard deviation. What's changed all the rules is the ability to create a measurable portfolio, eliminating all the emotions. How can Union Bank and Trust and Adams-Hansen and Associates deliver this level of quality at such a reasonable price? Well, we do not spend a lot of money on things that ultimately do not benefit the participants. We do not have private planes or yachts or a budget to go fishing in Alaska. We do our job, we do it well, and focus on being efficient, keeping expenses low. It is one more thing that we can do to deliver predictable returns for your participants. Please review the fund fact sheets and consolidated returns information, and schedule some time to discuss what we offer and see if it makes sense for some of your funds. Thanks for listening.